Today, my guest is Larry Goins. Larry has been investing in real estate for over 30 years. Previously, Larry served as the president of Metrolina Real Estate Investors Association in Charlotte, North Carolina. It's a nonprofit organization that has over 350 members and is the local chapter of the National Real Estate Investors Association. Larry is an active real estate investor and travels throughout the United States, speaking and training audiences at conventions, expos, and real estate investment associations on his strategies for buying and selling houses. Larry has also written several books on real estate investing that are available wherever books are sold. Larry and Candace are also the host of the Brag Radio Network. Brag is all about investing in real estate to be rich and generous. And Larry also has a podcast on real estate investing, Brain Pick a Pro, where he interviews experts from real estate and give his own expert advice. Between speaking engagements and mentoring other investors, Larry oversees the daily operations of his investing business that wholesales properties, seller finances properties, and holds properties for investments. On a personal note, Larry and his wife Pam have two children, Linda and Noah. He also has a granddaughter, Ember, and a grandson, Keegan. They are a member of the New River Community Church in Lake Wylie, South Carolina. He's a husband, father, businessman, and real estate investor. Larry holds true to his core values and moral integrity. His personal business motto is people and principles before profits. With that, we'll be talking with Larry a little bit about a couple of different topics on real estate. We're hoping to get into seller financing, HUD, and also have him explain a little bit about day trading. But first, a quick reminder, if you like our show, please let us know. We would love to hear from you. Remember, you can like, share, and subscribe. You can leave a comment, and we would love to hear from you. Also, if you want to check out how handsome our guests are, be sure to check out our YouTube channel, Commercial Real Estate Pro Network. With that, I'd like to welcome my guest, Larry. Larry, welcome to CREPN Radio.
What's going on, man? How have you been?
I'm good. How are you doing?
I am doing excellent. Just having fun and making money.
Well, that's not a bad combination. That's better than, I guess, the reverse, not having fun and losing money, right?
There you go.
Yeah.
And I've done that too.
Yeah. No, so no, you have the experience. You're a qualified expert on both. So, hey, Larry, before we get started, if you could take a minute and share with the listeners a little bit about your background and how you got started in real estate.
Absolutely. I'd be glad to. I bought my very first house in 1986. It was a way back then. Now, this ended in 1978, I believe, but they used to have FHA loans that were fully assumable, right? All I had to do was sign a paper. They didn't even pull my credit, and I could assume somebody's FHA loan. So that was my very first deal. I kept that house for, I don't know, probably 7 or 8 years, and then eventually sold it. I even sold it with seller financing and did a wrap around that FHA loan. But that was my very first deal. And I've done wholesaling, retailing, lease options, subject to, short sales. I've used private money, hard money, cash partners, credit partners. And I've done residential, commercial, multifamily. I've owned 2 mobile home parks. My first and last, it was the same one, right? I've done development. I've gone in and bought subdivisions, finished them out, cleared, graded, gravelled, and paved, put the roads in, and then built houses on the lots and sold the houses. But there's a couple of things that I love about real estate. I love wholesaling. It's quick money, fast money. It's very simple. And I love seller financing / lease options, right? And there's only a few things that I don't like about real estate. Actually, 3 things I hate about real estate. And those 3 things are rehabs, short sales, and tenants.
Well, I mean, at least you've qualified that. You put some thought into that. Sounds like you've got some stories to tell that have you've come to those conclusions. Those aren't just something you picked out of thin air.
Exactly.
Yeah. So you mentioned a couple things in kind of your experience there, and some things we talked a little bit about before we get started. I'd love to hear a little bit, and this kind of goes more to the audience, and just kind of give you a little explanation. Most of the listeners that I've had the opportunity to speak with are real estate investors, or they recognize that real estate's a vehicle they want to invest in to create a secure financial future for their
Right.
family. And so I'd say that the majority of the guests we've had thus far have been somewhere between an investor, syndicator, or a professional. Could be a broker or attorney or somebody along
Right.
those lines. And you mentioned that there's three things that I'd love to hear you get into. One is seller financing. You mentioned HUD, and then also day trading. And I'm just curious, is there one of those that leads to the other, or are they all separate, or how should we jump into this?
Well, I do a lot of different things. I've done a lot of different things over the years, but as I mentioned, I primarily focus on wholesaling and seller financing. I also do, and my wife runs this part of the business. I do um, hard money loans or private money loans. We loan money to other investors that are going to fix and flip properties, and so we do hard money rehab loans for other investors, and it's primarily in the Carolinas, although we have done deals as far as buying and selling in 12 different states, right?
Okay, so let's talk a little bit about the wh- wholesaling and seller financing.
Okay.
Um, and maybe I guess let's start with the wholesaling. I mean, I think that well, I'll let you explain. Give us your view of that and how it works for you.
Sure, sure. Well, we do a lot to make the phone ring. Basically, wholesaling is where we find a property, we get it under contract at a deep, deep discount, and then we start marketing it to our buyers list. And on the day we're supposed to close, we find a buyer. We buy it at 10 o'clock, sell it at 10:30. I call it real estate day trading, right? In fact, I wrote a book about it called Getting Started in Real Estate Day Trading. And so that's what we do. We spend probably about $10,000 a month in marketing. We mail out about 25,000 postcards. We do some Facebook and PPC ads. We do some bandit signs, and we find deals. I'm on the phone negotiating deals all day long, right, to buy properties. And some days I don't get any. Like on Monday of this week, I got 6 deals under contract, 6 offers accepted. So you just never know. You just never know. And then what we start doing is we start marketing to our list, and we find a buyer to buy that property, and we turn around and buy it and sell it the same day. I call it real estate day trading. It's pretty much the same thing as wholesaling.
Got it. So you mentioned you're getting the properties under contract, and then you're also dealing with the buyers. Can you take us through some of the characteristics of an ideal buy?
Sure, I'll be glad to. First of all, kind of the anatomy of the deal is we make the phone ring, right? Our phone probably rings 100, 200 times a week, right? So I've got 3 people out here, and what they do is they get on the phone and and they talk to the seller, and they basically separate the suspects from the prospects, right? So they separate the suspects from the prospects. They find out the person's detail about the person, detail about the property, the condition of the property, their motivation, how soon they want to sell, what would they do if they don't sell, all that good stuff. And then they set up an appointment or a task for me to call them. And I call them and make them a cash offer over the phone. And the way I do that is I basically look at the deal, pull comps, see what other houses are selling for in the area, and then I make my offer accordingly, right? And it's an all cash offer as is. And, sometimes I get them to accept my first offer over the phone. Sometimes, they want me to call them back. They want to talk to a spouse, think it over, whatever it is, or try to sell it themselves or whatever. So, I end up calling them back, and, a few days later, or a week later or whatever. And then, we get the house under contract. As soon as we get it under contract, right? Then what we do is we send somebody out to take pictures of the house. and they take pictures of the house inside and out, every room, any mechanical items, any repair areas, all four sides of the house, any outbuildings, a street view both ways. And we do all that. And then we start marketing it to our buyers list, and we find a buyer interested. Most of our deals, Darren, are lower priced properties, right? Like I might pick up a property for $15,000 and sell it for $30,000. Like we've had 2 closings so far this week, and one of them I bought for 30 and sold it for 45. The other one I bought for 50 and I sold it for 85.
Not a bad couple of days work. So tell me on the seller, when you're engaging them, you've got your callers, screening them, trying to determine whether or not they're qualified or somebody to level up to you to have you engage with them.
Right.
What are some tells? What are some things you guys look for in a willing to determine if you've got a willing seller?
Okay. Basically, you're looking for somebody who is a don't wanter, who the property needs work, right? The property needs work. Maybe the property's vacant. Maybe they're a tired landlord. And there's a lot of different lists that you can market. There's absentee owners. There's out-of-state owners. There's people in probate. You market to the personal representative of the probate. There's people who are behind on taxes. There's people who have code violations, people who have been arrested that own property. And what we do is we market and send out about 25,000 postcards a month. And when the phone rings, we're looking for, are they just curious, or do they have a property that they really want to sell, and they either don't have the money to fix it up or don't want to take the time to fix it up, and they just want to be done with it, right? Sometimes we even buy lots. Now, we don't pay much for a lot, usually about $500 or $600, but we can turn around and sell those either for cash or with seller financing.
Got it. So on a percentage number of cards mailed to calls, do you have any kind of a sense of your what your ratios are? What kind of?
Well, we mail 25,000 a month, and we're getting ready to bump that up to 37.5, I believe, adding another 12.5. But we typically get a couple hundred calls a week, so that would be 25,800 calls a month.
All right. So my math was at about is that 3?
About 3%.
3%. All right. And then when the calls come in, those that get qualified and up to you and offers, is there another measurement there that you guys run?
No, you know what? I should be tracking a lot more. I should be tracking the conversion rate, how long it takes to convert them, how long to go from the initial call to the closing. I should be doing all that, but right now we're not. All I know is every day I've got about 40 to 60 people that I need to call, right?
Yeah.
I only get through about 30 of them a day. And some of them are calling the same people back because you can't get them on the phone or whatever. But we're doing, sometimes 5, sometimes 10 or 20 deals a month.
Awesome. And then as far as the marketing of those properties, you mentioned you've got them under contract. You are putting them out to your list. How have you gone about developing your buyers list?
We're always developing our buyers list. In fact, every single property, not only are we putting it out to our buyers list, but we're also marketing that property. We go and we put out about 25 bandit signs that say foreclosure, or some of them say handyman special, some of them say must sell ASAP, but we put out about 25 or 30 of those signs all around the neighborhood, around the house, in front of Walmart, Walgreens, CVS, Home Depot, and Lowe's. And so we put those out, and we're a member of about 75 different local Facebook groups, right? So with the Facebook groups, they might be yard sale groups, marketplace groups, buy sell groups, real estate groups, realtor groups. So we post our properties on all those different Facebook groups, and we also put it on Craigslist, and we put it on our website. We put it on Connected Investor and Bigger Pockets as well.
Got it. Got it.
So we're always building our buyers list.
Right. No, you can never have too many buyers. More competition, more opportunity to sell. I mean, the last thing you want to have is lots of product and no buyers, right? So,
Exactly.
yeah, got it. All right. So let's move to the HUD, or actually, let's talk a little bit about seller financing, if we could first.
Sure.
In these deals that you're wholesaling, um, do you incorporate seller financing in those?
You know, it's funny you mentioned that. Typically with seller financing, what I'm going to do is I'm going to buy a house, I'm going to pay cash, and then I'm going to turn around and seller finance it for about 3 to 6 times what I paid. I've got a little model that I call Filthy Riches, and it's a way you can earn really high double digits and sometimes triple digit returns on your money. And we buy a house and we sell it for 3 to 6 times what we paid as is, and we sell it with owner financing. So, so we do that model. That's a model I call Filthy Riches. But also in wholesaling, how do I incorporate seller financing into wholesaling? Anytime I'm on the phone with the seller, if I can't get them to agree to my price, and we're far apart on price, I will ask them if they've ever considered owner financing, right? So, and then they typically they say, well, what is that about? Tell me more. So then I'll say, well, look, you know, for example, let's say if they have a rental property, they're getting ready to retire. They're tired of dealing with tenants, trash, termites, and toilets, right? And they don't want to have to deal with that anymore, but they like the cash flow because they're a landlord. I will say, look, I could probably pay your price if you're willing to finance it. That way you still keep your cash flow, but you don't have to deal with the tenants anymore. That's not going to be as much cash flow, but we're going to pay for the taxes, insurance, repairs, and maintenance and property management, right? So I negotiate that deal as a no money down deal. I pay them 5% interest. We stretch it out over 10, 15, 20 years or more. And that way they have a cash flow. Plus, especially if it was a rental property and they've owned it for a long time, they've probably depreciated it where they have no basis in the property, which means if they sell it for cash, they're going to have a huge taxable gain. Even though it's a long-term capital gain, it's still a gain. And if they sell or financing, they can take what the IRS calls the installment sale, right? Which means if I'm paying them $300 a month, that's $3,600 a year. They're only going to pay taxes on that $3,600, not the entire sale price, right? And so that's kind of the way that works. And then what I do if I'm wholesaling the deal, let's say I have a property, I really need to buy it for $25,000 cash, but I agreed to pay them $35,000 with owner financing. So what I'll do is I'll get that owner financing set up, and then I'll start marketing the property for say $45,000 with $10,000 down in owner financing. And I tell my seller up front, I'm going to turn around and sell this property and let somebody take over the loan.
Got it. Got it. So I want to back up here for a second because I think you touched on something I don't know that everybody fully thinks about when the topic of seller financing comes up, but the gains and the benefit to the seller. And I just want to kind of walk back through that. So that if you've got it, you've already offered them a price and they've said no, that's too low. And so now you've come back and you said, well, have you ever considered the seller financing? And so now you've got them into a position where are they still in agreement at the price you were negotiating? Is that
Sometimes they are.
okay?
Sometimes they are. Sometimes they want a little more money. That's okay. Um, like I had a deal not too long ago where I needed to be at 66,000 cash, but the guy was stuck on 82,000. He inherited the house. He had nothing in it. And I said, I got a way you could get some cash flow out of this house. And you don't have to worry about any kind of a tax bill or anything like that. So, so I offered him 82,000 with 100% financing, and I negotiated non-recourse financing, which means I'm not personally liable. It's fully assumable, right? There's no prepayment penalty, right? And 90 days until the first payment. So I had basically 90 days to sell that property. And I found a buyer that would pay me $99,900, and they put $18,000 down and took over the loan.
Sweet. Oh, that that works. So that wholesaling, the magic in that is the turn. I mean, if I'm kind of reading between the lines here, is
Right.
you got to find the property, but once you find it, then you got to find somebody to buy it. And what's
Yeah.
a typical sale time on that?
Well, excuse me. Um, we get them under contract, and our contract states we have 60 days. We can close anytime within 60 days, right? So we typically try to close in around 30 days, and sometimes even sooner. We've closed them in a couple of weeks before, but we've had some that, maybe it was a little bit more difficult property to sell, and it might take 60 days to do it. But as soon as we find a buyer, we're always telling our buyer, it must be a cash sale and you need to be able to close next week. For example, we closed one on Monday. One of the two that we closed on Monday of this week, we just got it under contract Wednesday of last week with our buyer. So our buyer came to the office, signed the contract, and we had the closing set up on Monday.
Wow, that's fast.
Yeah.
Makes everybody happy, I'm sure. I want to back up one more step. You mentioned as a seller that you guys do seller financing, and you I want to make sure I understood this. So if in the example like you had just people, or can you walk me through a seller financing deal here one more time?
Absolutely.
Okay.
Let's say I buy a house for $30,000. Okay.
Right.
Maybe I pay cash for it. Maybe I use private money or whatever. Maybe I use an IRA. So I take that $30,000 house. I'm going to turn around and sell that house, advertise that house. Why rent when you can own? Payments comparable to rent. Your down payment is your credit. And I'm going to sell that house for, say, $69,900, right? That's about 2.5 times, just about 2.5 times what I paid for it, right? So I advertise it for $69,900. I get somebody to put $5,000 down, and they put $5,000 down, and I finance $64,900 for 20 years. I typically finance it for around 9% interest, and the payment on that $64,900 would be $583.92 a month. So just under $600 a month. By the time they add taxes and insurance to their escrow, their payment is going to be around $700 a month. Okay. So now I bought it for 30. I got 5 down. I sold it for $69,900. Now I have an asset for $64,900. That's a note that somebody owes me, and I only have $25,000 in it because I paid 30 and I got 5 down. So I have $25,000 invested in that deal. So now I'm getting $583.92 a month for the next 20 years from a $25,000 investment. That's about a 43% return on my money right there.
Oh, that works. Any percentage on what am I saying, repossession or seller not or buyer not able to make their payments?
Yeah. Well, in other words,
Yeah.
what happens when they default?
Yep.
Yeah. Well, first of all, if the house is what we call fit and safe, you cannot enter into a landlord-tenant relationship unless a house is fit and safe, right? In other words, I could not lease a house to somebody, even with an option, if the house didn't have a water heater or the rail on the deck was missing, somebody could fall off or get hurt. But if the house is fit and safe, I'll do a lease option, okay? Which is a simple eviction if they default. If not, I do a land contract. A land contract, now there's only one state that you cannot do a land contract in, and that's Texas, okay? And you can only do a lease option for less than 6 months, right? So you need to do a mortgage or deed of trust in Texas. Now, by the way, Texas has more seller financing than any state in the country. So it's not slowing Texas down, okay? But so I do a land contract, right? And if they don't pay, we simply cancel the land contract and they move out. If I have to, I'll pay them a few hundred or $500 or $1,000 to move out. It's probably been 7 or 8 years since I've had to foreclose on anybody. So Yeah. So actually, a lot of people think, well, that's a bad thing. What if they default? Then what are you going to do? Here's exactly what's going to happen when you sell or finance a property. The absolute best thing that can happen, okay? The best thing that can happen for you is they refinance and pay you off. Like if I just sold that house for $69,900, I got $5,000 down. If they don't pay, or excuse me, if they went to the credit union or the bank and refinanced and paid me off my 64,900, that's the best thing that can happen to me, right?
Right.
The second best thing that can happen to me is they default and I get to sell it again. If they default, they move out and then I sell it to somebody else and I get another $5,000 down. Now, instead of having 25,000 in the deal, I have 20,000 in the deal, right?
Right.
So now I have less and my yield just went up, right? So the second best thing that can happen is they default and you get to sell it again. The third best thing that can happen when you sell or finance a property is they just make their payments. They make their payments as agreed. That's the third best thing that can happen. And the worst thing that can happen, or the fourth thing that can happen, is you have to modify the loan, right? You don't have to modify the loan. You could just foreclose or get them out. But the fourth best thing that can happen is you modify the loan and you let them make lower payments for 3 to 6 months to get some breathing room, and then you get them back on the regular payment schedule. But out of everything that can happen, the third best thing that can happen is that they just make their payments.
Right. Right. No, that's probably what most people think is the goal, the first best thing. So I appreciate
Right.
you sharing that. Yeah.
Sure.
So let's touch on HUD. You mentioned HUD, and I think that everybody's familiar with the acronym, but maybe not always how it applies to investment housing. Could you
Absolutely.
take us through a little bit of HUD?
Sure. Well, uh, I'm just going to be totally transparent with you. There's not near as many HUD houses as there used to be. You can still buy HUD houses and you can still get good deals, but there's not near as many as there used to be. Just because, like right now, there's not near as many foreclosures as there used to be, right? But a HUD house is nothing more than somebody got an FHA loan, okay? Somebody got an FHA loan and then they defaulted on it. Now, HUD and FHA are one and the same. FHA or HUD does not make loans, they insure loans. You go to a bank like Bank of America or Wells Fargo and you get an FHA loan, they underwrite it to FHA guidelines. So then the bank will give you the loan. And then if you default, if the borrower defaults, then the bank sells their loan to HUD, right? And then HUD forecloses, and it becomes a HUD house. Now, the only place in the world you can buy a HUD house is at HUDhomestore.com. That's the only place you can buy it. And HUD is a daily auction. A daily auction. You can bid on every house in whatever area you're in or you want to buy in every single day. It's a daily auction, right? And all the bids are submitted by a realtor with what's called an NAID number. You can't submit your own bids. They got to go through a realtor. So you got to find you a realtor, right? So all bids are submitted by a realtor with an NAID number. NAID number. That stands for National Identifier Number, right? So let's say your realtor bids on a HUD house for you. If they bid, remember HUD's a daily auction. The next day, three things can happen. Either nothing and your bid expires. If your agent doesn't hear from you or from HUD or HUD's asset manager, if the agent doesn't hear from them, the bid simply expired. The second thing that can happen is you get a counter offer. Maybe it was listed for 50, you offered 20, and they countered at 40, right? So the third thing that can happen is they accept your bid, right? Now, let's say if you get a counter. If you get a counter, there's four things you can do. You can counter back, you can submit a new bid, you can ignore the counter and it will expire, or you can accept their counter offer, right?
Got it. Got it. And I guess the thing that I didn't realize was that the HUD basically is the clearinghouse for FHA defaults. Is that?
Absolutely. That's the only place you can buy a HUD house is HUDhomestore.com. And I've bought hundreds and hundreds and hundreds of HUD houses over the years.
Got it. Got it. Um, Larry, on just kind of shifting gears here a little bit, I mentioned to you before we started recording that by day I'm an insurance broker, and one of the things that we're constantly dealing with is risk. And from an insurance standpoint or a risk management standpoint, we always look at it as there's three basic strategies. You can avoid risk, you can minimize risk, or you can transfer risk, which is what essentially an insurance policy is. I'm asking all of my guests if they could identify what they see as their biggest risk. And I'm not necessarily looking for an insurance answer, but I was hoping you could share with the listeners what you see as the biggest risk to your uh, investment operation, or how, what you see as the biggest risk.
Absolutely. I'll be more than happy to. And I know exactly how to answer this question. A lot of people think real estate is risky. Real estate is not risky. Being uneducated, that is what's risky, right? Once you get the education, it takes the risk out of it. Now, you also may need somebody to help you. Like you said, you can take on that risk yourself, or you can transfer that risk, right? Or minimize that risk or transfer it. That's what insurance does, right? But in real estate, I mean, yes, you've got to have property insurance. You've got to have liability insurance. You've got to have E&O insurance if you're a licensed agent. But you've also got to have education, right? Education takes away the risk. If you don't know how to handle something, you need to either get educated or be able to latch on to somebody that does. Like, I have a lot of students. We have a partner program. It's like a coaching and mentoring program where we help students and partner with them. And a lot of them will run into a situation and they don't know how to handle, and they reach out to me. For example, just a couple of days ago, a student messaged me and he said, "Hey, I've got this seller. He's got a property. He took the property as payment for something where somebody owed him money, but he deeded it to his son's name, right? So how much should I offer him? Blah blah blah." And I said, "Well, first of all, you've got a problem you didn't even think you had. They deeded it to the son. The son is a minor. The son can't sign anything. So the court is going to appoint a guardian ad litem, I think that's what it's called, to oversee that transaction and make sure the seller, the son's parent, is acting in the best interest," right? So there's all different kind of things that you need to be aware of that you may not even know you have a problem yet, right? So when I advised him about that, I told him to talk to his seller and find out if he knew that was the case, that he's going to have to go through that when he sells the property.
So my next question is, Larry, that sounds like a lesson maybe you learned. Is that how did you run into that situation on
Oh,
your own, or?
I ran into it years ago when I made a hard money loan in my son's name, and then the property got in default, and we had to foreclose to get the property back and then sell it. And we had to do the same thing. We had to do the same thing to be able to get clear title to the property to sell it, because even though I gave my son the money and made the hard money loan in his name, even though we did that, we were acting in his best interest. The court had to appoint an attorney to oversee that transaction to make sure we were still acting in the best interest of my son.
Got it. No, that's some insight that you're probably not going to read in a book.
Yeah, not a lot of people even know stuff like that, right?
Yeah. No, that's great. I appreciate that. Larry, before we wrap up, where can the listeners go if they'd like to learn more or connect with you?
Absolutely. Well, we've got a website, larrygoins.com, LARRYGOINS.com. They can go there. They'll find our podcast, Brag TV. That stands for Be Rich and Generous. Every week, every Wednesday at 2:00, we go live on Facebook Live, and we have a topic of the day, and we also give away free training and stuff there as well. And we also have the Brain Picker Pro, which we're getting ready to have you as the guest as well. So we've got that, and we've got a lot of other free training. Also, if somebody would like a free copy of a couple of books, we've talked about getting started in real estate day trading, and I just updated this book. This is the latest revised edition, and it's called Getting Started in Real Estate Day Trading, How to Buy and Sell Houses the Same Day over the Internet. All they have to do is call 877 Larry Go. 877 Larry Go. We'll give them this book. And I also wrote another book called HUD Homes Half Off, How to Buy HUD Houses for Pennies on the Dollar in Today's Market. We'll give them a copy of that as well. And I have a video training about the model called Filthy Riches, how to earn triple-digit returns with seller financing. And we'll give them that video as well if they want to call 877 Larry Go.
Got it. Larry, I can't say thanks enough for taking the time. I've learned a lot, and hope we can do it again soon.
Sounds great. I really, really appreciate you having me on. Thank you very much. And I hope everybody got a lot out of this.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.